say make money, money, make money, money, money. Make money, money, make money, money, money. Money makes the world.
Welcome in. It's your favorite host from Just the Tips. We got Bruce, myself. We got George, and we got Gordo, the moist maker, it looks like. Back for another episode, and glad to have everyone on board. We're going to do this the right way this time. We're going to talk about the disclaimer really quickly before we get started. So the information provided is for informational purposes only, should not be considered investment advice or recommendation to buy or sell any securities. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. Trading stocks involves risk, and you may lose money.
Are you reading this?
Yeah, where did that come from?
That's the I pulled that straight off of ChatGPT. I said, give me a financial disclaimer. So
God, see, there's compute cycles at OpenAI and NVDA.
we gotta try all the different large language models, see what they come up with. But that one was pretty clean.
Give me a saucy one.
We should do ones like from the 80s and from the 90s and from like middle.
Kind of like our news flash sounds.
Yeah, exactly.
Oh, yeah.
Speaking of timeless classics, this is Just the Tips. This is where we talk about one equity every week. We present the bull case, the bear case, and then we kind of tell everybody what we really feel about the stock. Typically, we focus on really interesting names, and we have another one today. Usually, they're tech names and they're high flyers. A couple weeks ago, we did NBIS, which was a big hit amongst all of our listening community. And we're looking to follow that one up with even a bigger one with Circle this week. And so we have George and Gordo presenting the bear and bull case. But before we jump into all that, let's talk a little bit about the news. Gordo, you want to hit us with the news theme?
All right. I did it before, but okay, let's do it again. Breaking news. Just the tip.
That was top 5 worst ever, I think. All right, so the topic du jour I think everyone has been considering is inflation and the ebbs and flows of the Trump Truth Social news cycle. So I don't know if you guys have any thoughts on that. It seems to be kind of flashing left and right, depending on the day, the time, the week. But it's sort of had a more and more muted impact on stocks, I think. But interested to hear what you guys are seeing.
First of all, I was going to say I'm glad that there is no client list and that the Epstein thing, we can stop worrying about that. And the Mad King put out a wonderful Twitter thing about how Hillary wrote the Epstein client list. It was a work of art. This is a masterclass in the presidency. We've never had a president like this. So knowing that, I can't imagine we can't trust that all this tariff policy is just well orchestrated, never going to be people. Obviously, I'm being sarcastic. I mean, so I've just been reading a lot that we're starting to see kind of, this is a key week for inflation data. Like people did stock up inventory ahead of anticipating the tariffs. Some people ate it thinking this is going to pass. Like, we're kind of at the moment of truth where I think we could start to see, the tariff impact. And at the same time, by the way, like, they're still pulling gardeners, off the ladders. They're still, getting, and they're literally deporting, or throwing people in camps that are U.S. citizens. Like, it's a very broad brush, they're using to grab people. So at some point that hits the labor. And they're talking about how like all the farms in California are not being worked. Like, I just do not see how we do not get inflation here unless the economy is in free fall, which I don't think it is yet. So I think we're going to get some inflation. You heard it here first. Watch that report this week.
Yeah, I mean, I think it'll be interesting. I mean, it's hard to say, but there's another, we're talking about tariffs again here. Trump's, now that he's done with his wars, he's back on the tariff bandwagon and slapping everybody with tariffs. Feels like we've been here before. No one's taking it too seriously. All the retailers are going to have a chance to stock up for the holidays. That's what the point someone I heard making, and it was just like, yeah, you have until September, even if they do kick in, they can stock up through December. Like, we're not going to see it for a while. I think it will come if they do go through, but it's going to feel like everyone's going to kind of, I think, get relaxed like we have so far and say it's not a real thing, and eventually it will be a real thing. But let's see.
It feels like the people that are taking the tariff threat the most seriously are the actual nation states, and the market is taking it less and less seriously, which I think is kind of the like intended purpose. I'm not sure like once the tariffs actually pass through, if there actually will be associated inflation, and if there is, if the market will treat it sort of like a one-time expense and back it out, or they'll take it as being more serious and persistent. It seems like the threats have like kind of gone in and out of the market and not caused as much volatility as they were initially. So I'm hopeful, like most companies will be able, if we're able to get to a place where we have like kind of a stable tariff regime, most companies will be able to identify and back out the tariff cost at a like a company by company or a corporate by corporate level, and then you can potentially like amalgamate all that into like a broader macro impact. But who knows?
Yeah, no, I mean, I think until you see it hit the print, I mean, I don't think anyone's panicking, and I think it's going to be a while. So it's nothing to see here. The question is, does our favorite, Fed chief, lower rates in the meantime as he's getting pressure to do from Trump because inflation isn't showing up.
JP?
Yeah, JP.
Dude, JP has got this economy on a rope, man. That guy has been a legend.
Trump says he's an idiot.
Trump does say he's an idiot, but this guy has like safely landed a plane with like almost no engines in like the middle of a storm.
Thank you, David Sachs.
He's I don't know. I think he's done an incredible job. So we'll see. He has someone who's actively trying to hijack the cockpit right now. So we'll see if he can complete the landing. But to date, it seems like he's done a pretty remarkable job. Okay, and then the second thing we wanted to talk about, I'm forgetting. What was it?
Epstein files. AI. It was the superintelligence division. Just basically Zuckerberg just dropping ridiculous money out of airplanes to buy people and creating a division to pay certain very choice talent like hundreds of millions of dollars. Just insane money for AI.
Yeah, I mean, I think that has like been sort of a big topic in Silicon Valley and everywhere. Like a lot of these engineers as background are getting like $100 million, $200 million 1 year, 2 year, 3 year type contracts. Like these are the equivalent of supermax deals in professional sports, and it's going to like the best engineers at OpenAI. It's going to the best engineers at Apple. Like the Windsurf deal, I heard got done as sort of like a massive tech and talent type acquisition after it fell apart.
Well, it wasn't an acquisition; it was a commercial contract, and they took the top engineers and they screwed everyone else in the company, basically.
Right. Yeah. Well, there you go. So I think it's like a new era of one. I think like you have to pay a massive amount of money for the best engineers in the world, and like there's no limit to that, especially given like the market caps of a lot of these companies. The top sort of 5 companies has risen dramatically. And I think the second piece is there's a regulatory environment that makes it very hard in some ways to predict acquisitions, and so folks are using other ways to bring these companies or their talents into these kind of mega blue chip hyperscalers. So
I mean, on that note, if you're Andrew Ferguson, right, you took over and you're seeing this, you said you're going to look at the scale deal. Like they said they were going to look at it. Like this is clearly to go around them. Like you got to look at these, right? And so like it would make me more pissed. I mean, I guess the question is, do they stand? These companies are ruined, right? Like if you think about like Scale AI, which we talked about last time, all their customers have ran the other way because Google's like, I'm not using a half-owned Meta company for my data. So it's like, what? But I don't think he stands still and does nothing. This is like, screw you. I'm going right around you. What are you going to do about it? And I think they're going to do something.
I think my view is the Trump administration generally has been more mercenaries than missionaries. And so I think like there's a price for everything, and
You mean they like grift?
yeah, I mean, look, I think if there's a price for everything, and so I think like most of the company, like the large hyperscaler CEOs, are building relationships with Trump and the Republican administration, and like
Yeah.
that has
Here's
to
my
come at a cost.
donation to your presidential library. Oh yeah,
Right.
I'll be a top holder of Trump coin. Yeah.
Exactly. I mean, I think there's some bargaining chips on the table that will get these deals done. Is my guess.
Yeah. You know that Trump has made $1 billion a month while in office so far. So his family's netted like $3 billion in the last 3 months.
That's it. It feels like a
Yeah.
light estimate, a conservative estimate.
That we know of. That we
Dear
know
Lord. Thing is, too, like it really leaves like Google and Apple, like the companies that are not founder led, can't do this kind of investment. And it's such a. I mean, people were saying that the private
of. Google
market.
just did it with Windsurf.
So how
They're
much of a
pulling-
check was that?
2.4 billion. I mean, it's not as big, but it's still big for when you're saying you're hiring a couple of people. You're hiring the
Sure.
Windsurf CEO.
I think the
So-
scale of what Meta's doing is different. And I feel like they have, the ability to be more aggressive. I mean, and private companies even more so, right? Because the private markets they do not give a shit. They will let you just print losses for the longest time just to win this war. But it just goes back that AI is real, and I haven't figured out the best way to play this stuff with public stocks. Like, I feel like there's a lot of risk. I mean, you can't buy. You're really going to buy Microsoft to get exposure to OpenAI? Like I don't know if that's makes a lot of sense. How much bigger can Microsoft get? Maybe you can go to 8 trillion. I don't know. But if I want to make a 100x return on AI, which is going to happen for somebody, like it's not can't buy Anthropic, right? Like what? And that would have a lot of risk too. I don't know they're going to be a winner. Like
Well,
who
you
are
can,
guys
you can
gonna
buy
be?
in the private market if you really want to.
I'm not accredited anymore, man, so I can't do that. But let's talk about our investors here on this retail investor. What can the retail investor buy? Like I don't know. There's that many options.
You still go to the infra plays. You go to NVIDIA. AMD is starting to catch a bid because their offerings are catching up. You've got some of the custom chip makers, the Broadcoms, the Marvels of the world, right? Those are different plays based on who you believe, cloud might take off, right? If you think
Nebius.
Amazon.
NBIS.
Yeah. You have the NBIS and CoreWeave
cloud, baby.
plays. But I mean, I like your point, Gordo. It's like everything these guys are doing, they're putting their money where their mouth is, right? Both in like CapEx spending and now even beyond that, right? Like just the amount they're paying for individual people. Like the stakes are super high here. Like the world's not going to look the same in a couple of years, and they're trying to position themselves best to, stay in the power seat, right? And so they're doing everything they can. And for these guys, they have so much money, and it's like such a small amount of their market cap. Totally reasonable, totally makes sense. All these other companies that are smaller, that don't have that girth, like, can you survive that transition? Like, it starts to make me nervous about, a lot of these smaller, middling SaaS companies.
I think the thing that the BG2 guys had pointed out, which is really interesting, is like, Zuckerberg controls the board at Facebook, so he can basically do whatever he wants. And like Google and Apple and Amazon, like nobody has that level of control. So like approving that type of like pay package is just much harder for a public company. Like a private company, it's much easier actually. And so that's changed the dynamics. But I think honestly, like we're reaching the point where like every board is going to have this discussion around just like opening the floodgates on the balance sheet to bring people on board, because that's just the price of doing business.
But I mean, these like, does Alexander Wang, let's use the Scale CEO, who's under 30 years old, great. He built a decent company, not like, I wouldn't call that like something that was necessarily a home run. Like, I don't know how that would have played out in the long run, but like, is he really an AI genius that's going to change the trajectory of your company? And how many? And even if he is, how many of those are out there? It's a hard question to answer. So I don't know. Like, are you going to take a huge risk on somebody like that you're not even sure can deliver for your company? Like, that's a hard.
Yeah, I mean, you have to be, because one, I think he did build like a home run company. Like it was like 12 or 20, I think, in its last private market valuation. It scaled really quickly. He's a pretty young guy. Like But that's sort of like a secondary point. I think you have to take these risks, especially like for multi-trillion-dollar companies that are all cash machines. Like it won't impact the shareholders at
For
all.
the big guys, and they can take a diversified bet, right? Like Facebook is hiring multiple people now. They put they put Alexander in head of the division, but like what he's being asked to do is much different. Like build AGI as opposed to build a company that creates synthetic data. Like those are two different things. But they're going to have multiple people in that division to rely on. But if you're a smaller company, like say you're like a HubSpot or you're a Salesforce, maybe you have, one or two bets to make, right? And what if you get them wrong?
Yeah, I mean, I think it's going to become a game of the haves and the have-nots. Like, I think there's going to be the people with $100 billion balance sheets that can do whatever they want, and there's going to be sort of everyone else.
Invest in the leaders.
Speaking of $100 billion balance sheets, we got a good one for you guys today. We have maybe the most recent IPO, Circle, or one of the most recent IPOs on deck. And on the bull case, we have
the moist maker.
The moist maker himself, Gordo. And on the bear case, we have George. And so, without further ado, Gordo, why don't you take it away?
Oh, my pleasure. I'm ready for GameCon. I love all this foreplay.
Make me moist. Make the circle moist.
Flicking the bean. Here we go. Use
an outstanding PowerPoint presentation.
Oh, jeez.
Yeah. Circle de Soleil. Welcome to the show. For those not be able to watch the YouTube video, it's available. Please go check it out. We worked hard on these slides. I got a little picture of Dwight Goodman from Dodgeball. Anytime you can make a Dodgeball reference, involuntary spasm. Look at the show. Enjoy the show. Here we go. All right. Quick overview. So, by the way, we're trying to go to a fast format. We're trying to get this a little tighter. So,
just like you and Saturday night in the bed.
Yeah. Hey, let's not be crude. So, this is a family show. My little kids are listening. So anyway, they went public in June. This thing has been a friggin' rocket ship. It is up 504% as of Friday. $31 IPO price. $187. 187 skills. So for you gangsters in the audience.
Yes.
So what do these guys do? Now I'll get into this a little more. They issue like these things called stable coins. They're basically like it's a crypto version of it's backed by the dollar. They make a lot of money by earning interest on their dollar holdings. They have reserves that are backed by mostly U.S. Treasuries. They have some other stuff. They got APIs and infrastructure for blockchain, native payments. They are regulated U.S. based. They're positioning themselves as a trusted fintech operator. So real quick, like I got this diagram here that kind of just lays out like what you do. Like a user, buys a stable coin and it's tied to additional currency. It's often $1, and then you can use those stable coins to more quickly go in and out of cryptocurrency. So it just facilitates the use of crypto. It's what we call a complementary good in microeconomics. These guys they're actually the second biggest stablecoin provider behind Tether. Tether's a little more transparent. They're the biggest, but again, like you can see, the vast majority of their shit is backed by Treasury bills. For example, they have 156 billion, almost 100 billion is U.S. Treasury bills, and they've got repos and money market funds. And there's even a little bit of Bitcoin in there, about 8 billion in Bitcoin that backs some of that. That's kind of incestuous precious metals. But anyway. It's kind of interesting to look at the market cap, like what's outstanding of stable coins. Tether's number, is number one, 160 billion. Our friends at Circle, the subject of this pod, they got 64 billion, and then it just really falls off. Like Athena, stablecoin is 5 billion. DAI, I don't know what the hell this shit is. First Digital has a billion. Like who cares? PayPal, 1 billion. Circle's right there. So, basically, these guys are definitely one of the leaders. You often want to pick, you want to bet on the winners, the guys that are the market leaders, because they're likely to have kind of momentum.
So you should bet on Tether, is what you're saying.
Well, Tether or Circle. I'm not going to just malign. I haven't done the deep research on Tether that I've done on Circle.
You can't really bet on Tether because they're privately held.
Yeah,
Yes,
unless you're in the
yes.
private markets, yeah, unless you're venture capitalist or something.
I just heard winner, and I'm looking at market share here. Tether's taking it home.
Yeah, so like here's an interesting chart. It's just like market cap of the Tether's stablecoin, and it's USTC, and the USDC is the these two together. If you just combine them in the green line, like that's the stablecoin versus Bitcoin, and two axes or whatever. But as you can see, like the market cap of stablecoin basically rises along with Bitcoin. It's actually less volatile, so it's got a very sharp ratio for those of you with a quant background. So it's basically I wouldn't say a backdoor, but it's just a direct play on the adoption and market cap of Bitcoin. So if you believe Bitcoin's going to keep going up, which I think most of us here do, some of us are very exposed to this market. I don't know how you could possibly be negative on these guys. So like really just the high points here. I'm not going to belabor this. The bull case.
But your point there was on volume. It's not a price play. It's a volume because stable coins are stable. So it's as Bitcoin goes up, your volume of stable coins goes up, which benefits Circle. Yeah.
Right. More money. So there's a few advantages here. I mean, first of all, the stablecoin market has just been exploding. These guys are number 2. That past performance doesn't always indicate future results, but if past is prologue, these guys, the market's really surging. How many people do you know that own stablecoin? There's a massive penetration play here. It's still not that big of a market. Something like 260 billion in market cap. Like that's just not that big, and we're in early days. There's regulatory advantage. Like you have this Genius Act. This is basically a MAGA stock, right? This is a play on J.D. Vance and Donald Trump. So
you got 3 years to make money.
Yeah, that's it. Hey, come on now. So is that all you got? I mean, Trump's going to be president for 4 more terms. I don't know what you guys are. They're going to keep him alive. He's not going to give it up. So he's going to be President Vance, right?
So anyway, on the side of his mouth soon. All right, keep going.
So but again, these acts they're going to favor folks that are really compliant. Circle is trying to become a very compliant player in the space. Super high margin revenue, like all that interest income just flows through the bottom line. Really strong margins. They have a payment network. So you've got an infrastructure play, built in here that just has a network effect, and they've got partnerships with folks like Coinbase and Fiserv. So I look at this and say I don't know how you could possibly bet against this thing. I mean, the secular themes and their market position and the regulatory environment, you'd be fucking stupid to make the bear case on this thing. So
don't they pay for some of those partnerships?
Hey, but they're high ROI, right?
Doesn't Coinbase own like half of the economics? Actually, more than half the economics here.
Is this your whole bear case? Hey, wait your turn at the orgy, right?
But there is even just fundamentally there is like fairly high interest rate risk.
That is a risk.
Which I'll get to.
Yeah, I'm sure our bear case will cover some of the risks, like lowering interest rates, where that's no bueno. But inflation is good for interest rates.
How did these guys maybe just to maybe spend one more second on like how do these guys make their money? Like just to make sure it's crystal clear for folks.
Well, I mean, I just told you, right? I mean, the primary it's through interest income is a huge piece of it.
Well, they make 95% of their money from interest rates. Like they make a discount to SOFR effectively, and that's where most of their income is interest income.
Right.
That's the predominantly where they make.
Because they're taking your dollar, they get to hold it to back up the coin, and so then they're just investing that in U.S. Treasuries or whatever, and taking that money into their own, and they're paying you the person who bought the stable coin nothing.
Yeah, it's a great business model.
You can make. They do pass on some of those. The interest rate income to the holders of USDC. Like if you hold USDC on Coinbase, you'll make 4.5 percentage points.
Coin doesn't right now. Yeah, they've got a promotion, essentially.
No, they've always done that.
I don't know. My understanding is it's temporary, but yes. Okay, let's keep going.
All right. So I see a point being made down the road. So some people care about valuation, and I care a little bit. But I would look, hey man, like what really matters here. I mean, first of all, I would just draw your attention to their EBITDA. These guys are already as an immature company. doing like $500 million next 2 months. Anticipated to do $500 million in EBITDA. 16% EBITDA margin. Like for an immature company, only at $3 billion in revenue. Like that's pretty impressive to making that kind of money at scale, at that small scale. In that level of growth. I mean, they are expected to be growing about 54%. So, that's a pretty impressive, margin and growth rate. But, I think this is what really matters. Again, this is that same idea that I like EV to revenues to growth, especially for an immature company. Like their margins could expand on the road. Like let's just look at revenue growth.
They're a profitable company. You can value them on PE, which is 140 times.
When they're $100 billion in revenue, they're going to be way more profitable. They're going to have like 80%, EBITDA margins. So, just like who's the payments company? It's the FICO guys. Like those guys make like 80% EBITDA margin, or Visa that makes like 69 or something. It's crazy.
Yeah, but they're a license model. This is you're based on treasuries. You're only going so high.
Hey, don't hate it. So don't hate. So anyway, looking at EV to revs to growth, that's a classic one that kind of normalizes. EV to revs expensive. We look back. It was EV to revs. EV to sales. Let's see here is 16 times. A little group average is 7, so it's a little pricey. But there's stuff in here like Visa at 16 times and Mastercard at 16 times, Coinbase at 14 times. So they're in good company. But if you look normalized for the amount of growth they have, they're at a massive discount. They're like a 30% plus discount, 34% discount. 0.3 times EV to revenues to growth. Like that's a low number versus what we've often seen. And so I'm going to argue like it ain't that expensive for how fast it's growing. So, I say don't get in front of this train. Stablecoins and Bitcoin and crypto is the future. You have an amazing regulatory environment. They're a market leader already. QED. This is a screaming buy. And with that, I will drop the mic and pass it to my friend, Georgie Porgy, the engorgedy.
Well, I mean, I think you have to assume that there's a huge market here, that Bitcoin continues to grow and becomes like humongous for them to really grow into this valuation, right? Like it's one thing to grow 54% this year, but let's like long term, they're still off a small base. Like their revenue base is not that big, so like growth is going to get harder in the future. So it's great that they have a high growth number now, and you divide EV by revs, and you get a reasonable looking number, but like they don't have any scale. So
it's just math. Okay.
It's just math, yeah.
Get ready for the ugly presentation.
I mean, this guy's pretty ugly right here. Let me tell you that.
Not the one in the orange jacket. That guy is handsome.
All right. Just the tips logo. All right. Stablecoin unstable valuation is my title. You see what I did there?
I thought for sure you would be like circle jerk. Like that was just an easy one.
I'm trying to keep it. This is a family show, as you said. I thought about circling the drain, but anyway, stablecoin unstable valuation. So I played with the animations here. I'm doing the Bruce. All right, I'm gonna jump straight into the bear case. So these guys, as we alluded to, have a lot of rate sensitivity. So I believe high 90s% of their revenue is tied to interest income on reserves, which is set by the Fed. The Fed is, the next move. Everyone is talking about the Fed cutting rates. It's going to cut their ability to earn. In fact, if you look at the last 10 years, our interest rates are at all-time highs. So, for that time period, right? The other thing that, happens to companies that have a lot of interest rate revenue come in the door is they tend to be very volatile, their earnings, because they go up and down with interest rates, and they don't trade at premiums. The companies that trade at premiums have very dependable, stable earnings, like a SaaS, a SaaS company that has subscriptions. This is going to be very volatile based on volumes of stable coins and interest rates, and they can't really control that. So I think, to get a premium valuation here, this is not the type of company that should have one. And so I took this from Oppenheimer. They have a estimated change in reserve income based on interest rate changes. And so if you look and there's a cut of 200 basis points, 200 basis points, you lose almost 900 million in reserve income. That's huge sensitivity. And you say, well, geez, 200 basis points, 2% sounds like a lot. Well, look at the Fed funds rate. It's moved way more than 200 basis points here. In 2016, we were basically down at 0, jumps up to about 2.5, and then so that's over a 200-point move. During COVID, basically falls to 0 again. So again, another 200-point move. In 2022, it goes from 0, basically above 5 to 5.5. So 500-point move. And now we're starting to move down again. So moving down 200 basis points is not unheard of. So like there's going to be huge volatility in earnings here. And these guys really don't deserve, the kind of premium valuation that they're getting. And I think the risk is to the downside here in the near term. And I have Jerome Powell there and Trump, with their little dispute about interest rates. But the next one.
There is a chance that it does move to the upside, though, right? Like if,
You can't predict it. I will agree. You can't predict interest rates. So yeah, you could. I mean, if it increased by 200, you'd have 900 million more, right, at current holdings of interest income, assuming they're buying all treasuries and derivatives off of that.
I mean, what happened in the 70s late 70s when inflation hit?
Yeah. But Trump doesn't want. Trump's fine with inflation. We can inflate our way out of the debt. He doesn't want anybody to raise rates.
So even more so, exactly.
Well, you gotta have a Fed that's gonna fight inflation. So we'll see if Trump is and his replacement for Powell, right, who'll be here in 10 months, is going to do that even if they see inflation. They'll probably be. My guess is they're gonna be hesitant to admit inflation exists. But, anyways, the next one is competitive storm coming. So, here you have a moat that's been regulatory, but now that's starting to open up, and so you've had a lot of folks talk about coming into this market. Every bank is going to want to play in this game. So think of like your J.P. Morgans and your Goldman Sachs. Like, why wouldn't they have a stable coin? More fintechs. Amazon talked about having their own stable coin in their environment to pay for purchases. Same thing with Walmart. Walmart is not the most. It's not the most, tech forward company. They're not horrible, but they're talking about doing it. So today, like Circle and Tether have this market to themselves. Like there's going to be a lot more folks that come in here with a lot of, credibility in terms of being able to deliver a product that doesn't necessarily break. And I'm going to get to Circle has broken before it's pegged to the dollar, which is critical. The other thing big point that I want to make is like we talked a little bit about the interest. So yes, Coinbase on their platform does offer yield. Circle does not offer yield, or it's not offered outside of that today. And so like they're booking all of that interest income themselves. And so as you get more competition, this is going to start to look more like a money market fund or a high yield savings account where it's a commodity, and end of the day, like you're just going to be shopping for yield. So they get to capture 100% of that today, Circle does. They're going to have to get more competitive, and they're going to have to share more and more of that margin with their customers. And end of the day, you're not incentivized as a end user to hold a lot in stablecoin because you get no yield on it. It's going to be like gold. So you're using it for transactions, you're using it for utility, but you're not going to sit there and hold a bunch of stablecoin because it does nothing for you. You get no yield. And the dollar will be depreciating on its own, which it's pegged to. So like it's not a value to hold. I think there's going to be more competition, and they're going to have to give away their margins. So you talked about their margins going up with scale. I think competition is going to bring margins actually significantly down here. And I've got my little South Park guy talking about competition coming in for my meme there. Platform dependencies and concentration risk. So most recently, 54% of the reserve income went to coins. So they have about an equal interest. There's a lot of nuance that I won't spend time in here. But basically, like Coin or Circle is paying Coinbase for distribution. And that's what they're doing to make them the preferred stablecoin on their platform. They just cut another deal with Binance that was using Tether, and Binance is even bigger than Coin. So they paid them $60 million up front, plus they layer on other incentives to do that. So they're paying for distribution on the platform, and that's going to get more competitive and more expensive. So end of the day, like, I think there's a risk there that if they're not the preferred coin or other competition comes in that's willing to pay more, like right now they've kind of got an ability to, be the first ones to market, but it's going to get more competitive and they're not going to have that distribution all to themselves, or they're going to have to pay more for it.
But the competitive threat, which I think is very real for this company, will take time to manifest itself, right? Like they have a pretty big head start on most of the competitors. Like the largest crypto platform in the world, Coinbase, is effectively like a co-founder here and uses them and makes a ton of money on them, and has really since inception of Circle. It feels like there's still at least like some considerable moat in scale and time that should.
I think the interest rates are going to be a difference. Like, think about the money market. There are stablecoin money market funds, right? Like actually Circle even has one where they are paying out interest. But that's, if nothing else, it's going to show up as, I think, margin pressure, and they're going to have to share the interest that they're getting, with that end user. I think that's where you're going to see it before maybe necessarily they lose share. All right. This is actually my last main slide. I have an extra credit assignment, but limited real world use. So again, just pointing out that 2/3 of crypto is still basically for the casino, and it's not for real world uses. However, I will say, I will admit, stablecoin does have interesting uses around helping people make transfers in the real world. So it's very expensive to transfer or do forex exchange. It's slow. There is real utility with stablecoin. If you're sending money cross border around the world, if you're one of those migrant workers sending money back home, it's so much cheaper to use this that I think there is real world use for it as an exchange there. But for the most part, you're not transacting your daily transactions still in crypto. So that's something that you have to bet on that's going to happen. And then it's built on trust, right? End of the day, what is a currency? It needs to be trusted. And so you have to believe that this thing, if you're putting your money into it and you want to go back and forth with fiat currency, here being the dollar, versus cryptocurrency, you have to believe it's going to hold. And USDC in 2023 depegged from the dollar. So it went down to 88 cents on the exchanges, and that was due to SVB and some of the things that happened there. So it was an extraordinary event, but it's not it's not without risk. And so I think you're going to see if a JP Morgan or some of these big financial institutions come in, again, that's where they can take a lot of share because you're going to have to trust. And then valuation. The last one I have is valuation disconnect. So Circle, as Gordo pointed out, IPO'd at $8 billion valuation, and now it's trading around 43. You don't usually see bankers misprice something so dramatically. I think this has become the meme stock, right? Everybody, I want to invest in crypto. So at 142 times, next year's earnings, it's it's already won, global reserve status here, which it's clearly not there yet. So I think the upside that you have here, even if everything went right, is already baked in the near term. It's just very hard to say how this thing could be, valued higher than it already is. And it's a profitable company. So I would argue PE is a perfectly reasonable way to value this. And with that, I will just show you my extra credit assignment. I know we don't have time, but I did a little exercise I thought was interesting because Coin has a 50% interest versus Circle. If you backed out Circle's value from Coin, how much does their brokerage trade on? And when you look at it, I came up with just under 9 times. And you might say that's actually quite cheap for a brokerage, especially if you say, hey, it's more comparable to a Robinhood that has high growth. Robinhood, I think, is at 17 times EV, and they're trading at 9 times EV. So there's some disconnect between, I think, the Circle valuation and the Coin valuation of the underlying asset here. But anyways, I know we're trying to go fast, so I won't belabor the point. But that is the bear case.
Good boy, Coin. Buy Coin is what you're saying.
Perhaps, yeah. If you really believe that Circle is fairly valued, you would buy Coin. I think there would be value there.
Okay.
Alrighty. Well, there you have it. I think we have about 65 seconds for our real views. So maybe we'll start with Gordo, whose real views I think were obvious, but
Actually, they weren't. I was just emphatic. This thing is a flaming turd. This thing is a Kentucky Klondike bar. This thing.
Hey, what's a Kentucky Klondike bar?
Look up on Urban Dictionary.
I'm scared.
It is not. This is a piece of shit. I mean, like, there's nothing but interest rate risk. There's no barriers to entry. It scares the hell out of me that, like, they're not charging or offering interest and coin is. Like, it just seems like a lot can go wrong. With the stock up this much, this quickly, you just got to wonder what people are thinking. Like, I am actually going to go short. I'm going to say, these things can, go way nuts before they can go parabolic before they can go, before they come back to the ground. But I'm going to take the risk because this feels so inflated right now. I mean, I can't disagree that I'm coming around to the crypto, thing, and that, yeah, for sure, like Bitcoin, it's a thing, and crypto's a thing, and stablecoins are a thing, but like, there's just tons of stuff to worry about here. Coupled with the valuation, I mean, $31 IPO maybe, but at at this current price, you'd have to be smoking some really good shit to be like, yeah, this is going to double from here. Like, no way. So I'm actually on the pain train for Circle.
I'm gonna join you on the same train. So my views were what they were. What I said. I mean, I do agree with you. I think it can continue to trade higher than it should for a while, and that's always the danger of shorting. But like all the good news that can possibly be, in here is in here. So I think it'll just trade on, it's not trading on fundamentals at that point, but eventually the fundamentals will come around, and I think competition will come. So I'm staying on the sideline. Bruce, what's your view?
Yeah, we're 3 for 3 on this one. I am actually short this stock. I think.
Woohoo!
I think it's actually a quality company. It is the gold standard for stablecoins, and I think it will continue to be the gold standard for stablecoins. Like I think their business is very good. I think they've built like as big of a moat as you can, but as we mentioned, it's hard to build a sustainable moat here. I just think the valuation here is like way past where this company is at the fundamental level, and so I just think in the near term this is definitely a short in my book. This wouldn't be one that I would hold for like 3 or 4 years, but I think like the other thing to note here is there's only a limited amount of float in this company. They've only floated like I want to say 10% or something of the shares, so there's very little availability in this company, and then the lockup's going to expire in call it 5-ish months, and like you have a lot of venture folks and shareholders that bought preferred that are converted to common but are like jumping for joy on the sidelines and can sell at any level and make a 10 to 100x probably here. So there's going to be a ton of downward pressure here in the next like call it 5 to 6 months, and I just think like this thing is set up to just come crashing down.
All right. Well, it feels good. Kumbaya, my lord. Have we ever had like all 3 of us hate a stock at the same time? I think we've had 3 bulls, but never had 3 bears.
3 bears. Yeah. All right.
There we go. Like for everything. And with that, bulls win.
Wait, is it bulls make money?
Bears make money.
Pigs, oink oink, get slaughtered.
Sweet. The end.
We out.
Say make money, money, make money, money, money. Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound. Fat pockets. I need that Skrilla on the Rilla. Fat pockets. I need that Skrilla on the Rilla.